Good morning. Today is Monday, November the 20th. The time right now is 8:21 in the morning. Over the weekend, we can see equity prices has been pretty quiet. Of course, that is to be expected in the face of no major economic number released on Friday. And we can see the equity market has been relatively firm since the start of the month. And on Friday, we can see the Dow Jones Industrial Average in the futures contract, referencing the micro E-mini futures contract in the Dow Jones, traded to a high of 35,166, and this level is not that far away from an immediate barrier to higher prices at 35,226 to 35,458. Now, this market may actually be capped here temporarily, and although I do expect a bit of a pullback going into the super long weekend, prices may actually drift lower to 34,369 to 34,459 in a profit taking. So do watch out for potential profit taking to appear. And if they do appear, I think there's going to be a good chance that at this level here that I just mentioned may actually hold. So this could actually be a buying opportunity going forward. And over in the micro E-mini S&P 500, we can see the same thing is happening, but on Friday there was no new high being traded. The high traded was actually done on Wednesday, last Wednesday, 4,542 even. And again, this level is not that far away from a very minor resistance level at 4,556 and a quarter to 4,566 even. Now, if the market do break above 4,566, it could change the entire outlook for the micro E-mini S&P 500 because it will flip the market from bearish to bullish, at least in the daily time frame. So do look out for the potential. But in the meantime, I do expect some kind of profit taking to actually occur, considering the market is going to be pretty quiet this week itself. Now, in the micro E-mini Nasdaq 100, same thing happening. Again, there was no high traded on Friday. This high was actually traded on Wednesday at 16,049 even, and this is very, very close to breaking this barrier at 16,062 and a half. And if that level is broken, very similar to the S&P 500, it could change the outlook going forward. Now, but in the meantime, I do expect some kind of light profit taking to occur. And if there is going to be one, I think the level of 15,465 and a quarter to 15,588 and three quarters should be able to hold out, and that could present yet another buying opportunity. Over in Asia, we can see that the Nikkei 225 remains elevated as well. The high traded at 33,620 was actually traded on Thursday. There was no new high traded on Friday, and this market is already brushing against this bracket of prices at 33,590 to 33,810, which can potentially cap this market from going higher. In the meantime, if there's going to be any profit taking, the level here at 32,670 to 32,800 could present a buying opportunity. I think there's a good chance the market may flip be above 33,810, and that also will change the structure and outlook for the Nikkei 225 going forward. And over in Hong Kong, we can see that the Hong Kong market has actually taken a very, very sharp dip from a high of 18,429, which is no incidence because this market was actually went into a block of price range in which I was expecting some kind of uh, uh, emergence of selling interest, and that is exactly what happened. That level is 18,392 to 18,572. So prices did have a very, very sharp turnaround, and although it did not quite hit the target or where I think it should actually be heading to at 17,136 to 17,363. The market do enjoy a bit of a rebound on Friday, but let's see if this rebound can be sustained. On the upside, the market immediate up barrier will be at 17,805 to 17,958. So do look out for some kind of resistance to emerge from around these levels here for another dip into the 17,000 levels. Now, over in the currencies, we can see the dollar index continue to ease off from a high of 106.99 on the back of a disappointment after the CPI numbers was released. And that is actually this exactly the move here. This is on Tuesday when the CPI numbers were released. So we can see overall the entire structure in the dollar index suggests that we could see possibly another dip going forward. And if there's going to be another dip, I think the area around 103.22 to 103.63 should be able to hold. Now, this is referencing the futures contract traded on ICE, which is the Intercontinental Exchange. Now, upside potential is going to be possibly limited to this swing low here, and that level is 104.69. Do look out for market to be trading between these two barriers of prices. Over in the euro dollars, we can see euro dollars has benefited because the dollar has been pulling back, and if the market has basically brush against this level of price at 109.13 to 109.45, which I do expect to see selling interest re-emerging. And the high traded so far on Friday was 105.14. So that actually fulfilled this outlook here. So going forward, there is a possibility of a pullback. And if we do see a pullback, market may go back to the origin of this move here, which caused the market to surge all the way to 109.14. The level is 106.90 to 107.10. So do look out for some kind of pullback into this area here. And if it does, that could present a buying opportunity. Now, sterling is also another market that I think there is potential for further rise. And the market has gone up to a high of 125.06, and that happened on Wednesday. And the market right now is struggling. If the market right now continue to edge higher, it will be capped at 124.80 to 125.10 levels. So do look out for that, for the market to dip into ideally this area of prices at 122.33 to 123.02. Okay, so look out for the potential of a pullback before the market stabilize and then attempt another rally. Okay, over in the Aussie remains very well bid, and we can see that Aussie traded a high of 0.6542 on Wednesday before the market come under profit taking. And if this profit taking continues, the possibility we can do a three-wave pullback, ideally targeting 0.6440 to 0.6416 levels for another rally attempt back to challenge the 0.6625 to 0.6635 levels. Dollar Canadian continue to be weakening. Does looks like it's going to see a pullback, further pullback. Okay, we can see that the market hit a high of just under 139 and has been doing this large degrees three-wave pullback, and there's a possibility the market will be gunning for 135.80 to 136. So do look out for the possibility of another dip into this 136 levels. Dollar yen looks very interesting because we can see that the dollar yen actually attempt to take out last October high, which is 151.94. We have a high of 151.91 on November 13, and that did not quite break the market, and market came under severe selling pressure, and that was made worse by last Tuesday CPI number release. There was another dip in the dollar rate, and we can see the dollar actually went all the way down to 149.19 before we see a bit of a rebound. This morning the market seems to be stabilizing. Upside potential is going to be quite limited to 150.55 to 150.70 levels before the market dip back into this level at 148.80 to 149.10. Okay, over in the precious metals, we can see that gold prices has been easing off. The high traded last week was at $1,993.50 thereabout on Friday, and this is just shy of a bracket of prices which I believe the market may come under selling pressure. The level is $2,002.80 to $2,017.80, and if we do see a pullback, these are the levels of potential buying interest. The first layer will be at $1,955.50 to $1,964.50. This will be the first support area. However, I do have the view that the market may actually dip a little bit deeper. So in the event we see a deeper pullback, that could again present a buying opportunity because precious metals as a whole seems to be very, very firm. Now, last week we can see silver outperforming gold for quite a fair bit. We can see that gold did not have a new high structurally, but we have a high traded in the silver contract. We can see silver traded to a high of $24.14 on Friday, and it's currently coming under a bit of a profit taking. I think the immediate support should be around $23 to $23.18 in the spot market. And if this level can actually hold out, there's a possibility it could be a base here to propel silver prices back to challenge the $25 levels. And over in crude oil, we can see crude oil has been suffering for quite some time. Market has been falling for all this while to a low of $17.13, which is not much of a surprise because I've been talking about the possibility of lower prices in the oil market. And finally, the low could be in place at $72.13. And on Friday, we see a surge in prices, but we still have to see whether this tentative rally is going to be able to hold, because the price right now is stuck within a first barrier of resistance at $75.64 to $75.58, and we want to see how the market reacts here. If the market can punch beyond and take out the $79.72 convincingly, then the market have a good chance of actually rallying even higher to test this immediate level of resistance represented by this sloping black color line here, which is just under the $72, the $82.90 level. And over in Bitcoin, we can see Bitcoin has been pulling back quite a fair bit. There was 2 attempts to break out of 38,000, but both attempts actually failed. The first attempt was actually on November the 9th, and the highest traded was 37,974. And the next level to the next time it tried was last Thursday at $37,973 there, about missing taking out the 38,000 by just one lousy dollar. So we can see that the prices has actually pulled back in. I would suspect it's going to be disappointment. Now, the whole entire rally that we see in Bitcoin since mid-October has been on the back of the possibility of the Security Commission, the Security Exchange Commission, the SEC approving at least one of the dozen applications for the spot BTC ETF license. But the time has come and gone. Market analyst was expecting at the latest last Friday to get some kind of news update. Apparently that did not happen, and that could actually build up disappointment in the marketplace. All this long position was hoping for some kind of approval of the ETF license. Now that that is not happening, of course, attention will next shift to the next major event, which is the halving event for next year. But that is at least 6 months away. So we can see that that is not going to be the driver going forward. The ETF license is going to still be in the crosshair of a lot of traders. So do watch out for the possibility of disappointment building up in these long positions. It may actually prompt this long position to be unwind. And if that cause a major unraveling of price below 33,000, it could cause Bitcoin prices to unravel all the way to 30,000. If that is the case, then I would think that would be a great position to actually load up on BTC, because going into the halving event next year is going to be pretty bullish going forward. Technically, the market also looks very bullish, so do look out for that possibility. Of course, if the market can punch beyond 38,000, then of course this pullback scenario will be mooted. So let's watch what happens going forward. In the meantime, that's all I have for you. Now remember, this week is going to be a shortened trading week because on Thursday we have US celebrating their Thanksgiving holidays. So the US market will be closed on Thursday, and on Friday the market will open for half a day in the States. So it can be taken to be a super long weekend. So if you have no reason to hold position beyond Wednesday midnight our time, then try not to, because there's just too much uncertainty in the marketplace to allow exposure to be held over such a long period of time when the market is not open. That's all I have for you. I'll see you tomorrow with another update. Bye-bye. Take care.